Most people want to be brilliant. They want secret formulas, complicated strategies, a magical investment system. I never chased brilliance. I focused on something much simpler, avoiding stupidity. My name is Charlie Munger, and if you learn to consistently avoid foolish decisions, wealth becomes almost inevitable. Most people approach wealth the wrong way. They ask, "How can I make more money?" But that's the wrong question. The better question is, how can I avoid losing it? Because if you consistently avoid big mistakes, time will do the rest. Yet most investors do the opposite. They chase excitement. They follow the crowd. They react emotionally. And then they wonder why wealth never stays with them. Lesson 1: Inversion. One of my favorite mental models is inversion. Instead of asking, "How do I succeed?" ask, "How do people fail?" Study failure carefully, because failure patterns repeat. People destroy wealth by taking excessive risks, following hype, ignoring fundamentals, acting on emotion. So the strategy becomes simple. Avoid the traps that ruin everyone else. If you do that consistently, you already have an advantage. Lesson 2. The world rewards discipline. Let me be clear about something. Intelligence is overrated. Discipline is not. I have seen extremely intelligent people make disastrous decisions. Why? Because intelligence without discipline becomes arrogance. Wealth is built by people who can wait patiently, think clearly, ignore noise. Most people cannot do this. They need stimulation. They need action. But markets reward restraint. Lesson 3. Avoid the crowd. Crowds are emotional. They panic together. They celebrate together. They lose money together. The problem is simple. Humans are wired to follow others. It feels safe. But following the crowd in financial markets is often the fastest route to failure. When everyone believes something is obvious, it's usually overpriced. Independent thinking is uncomfortable, but it's profitable. Lesson 4: Simplicity wins. People love complexity. Complicated trading systems, exotic strategies, endless indicators. But complexity often hides ignorance. The best investors operate with simple principles. Buy good businesses. Avoid excessive debt. Be patient. That's not exciting, but it works. And it works because most people are incapable of sticking to simple rules. Lesson 5. The power of long-term thinking. The biggest advantage in investing is time. Yet almost nobody uses it. People measure success in weeks or months, but real wealth compounds over decades. You don't need constant brilliance. You need consistent rationality. Avoid catastrophic errors. Let compounding do the heavy lifting. That's the quiet path to enormous wealth. Brutal truth about human nature. Here is the uncomfortable reality. Most financial failure is psychological, not intellectual. People know what they should do, but they don't do it. They panic. They envy others. They chase fast money. Human psychology destroys more wealth than bad investments ever could. The challenge is not understanding the strategy. The challenge is controlling yourself. The real strategy. So here is the real strategy. It's not glamorous. Avoid stupidity. Avoid ego. Avoid emotional decisions. Avoid unnecessary risk. And most importantly, avoid the temptation to constantly act. Because the biggest money is not made in buying or selling. It's made in waiting. People often ask me the secret to wealth. They expect complexity. They expect brilliance. But the truth is almost disappointing. We avoided stupidity. We stayed patient. We focused on rational decisions. And we let time compound those decisions. The world celebrates brilliance. But in investing, consistent rationality wins. Avoid the obvious mistakes, and you'll be amazed how far that alone can take you.